Hello friends, we are today doing a live session from Ekcel Academy and the topic for today is value of supply. All right, so let me share my screen and jump straight away into the topic. All right, before we get started with the topic, let us first try to understand why is this chapter there in the GST syllabus, first of all? Why is this chapter there in the GST law? What were the problems being faced by the government which they wanted to solve by bringing in the provisions for value of supply? Value of supply means the price on which GST has to be paid. The price or the amount on which GST has to be paid. All right. But we all know the price on which GST has to be paid. Imagine the rate of tax on a particular supply is 18%. Imagine the rate of tax on a particular supply is 18%. On what value do we apply this 18%? We are given an invoice. The amount mentioned in the invoice is the amount on which we multiply this 18% and get the GST. So where is the confusion? Let's take an example. Let's say we purchased a laptop. The seller will give us an invoice. The invoice will contain the price for the laptop. On this price, we'll multiply 18% and we get the GST. So where is the confusion about on what amount GST has to be paid? Why is this chapter value of supply there? Is there any difficulty in finding out the amount on which we are supposed to pay GST? Looks like there is no confusion. So why is this chapter there? Now let's look at some of the complications which may arise in this simple scenario that we are seeing. Imagine this is the tax invoice. The laptop's price was 60,000 rupees. The total becomes 60,000, remains the same. After this total of 60,000 rupees, imagine there is municipal taxes of 500. Now the question comes, should we multiply that 18% rate on 60,000 rupees? Or should we add this 500 rupees and charge the GST on 60,500? Let's take further complications. Imagine there is a discount given of 1,500 on the same invoice. Now what to do? Before multiplying the 18% GST rate, should we subtract the 1,500? Or without subtracting 1,500, should we first calculate the GST and then minus 1,500? Further complication. Imagine this seller, for the sale of laptop, they are also charging us for the delivery of the laptop. 200 rupees charged as delivery charges. Now, is the computation of GST simple? Now it's not so simple. Now it's not so straightforward. We are made to think on what value will we multiply the 18% rate of GST? That is the question that this chapter tries to answer. What are we supposed to include in this value? What are we allowed to exclude from the value? What are the situations, what are the conditions we should follow if we want to exclude something from the value? Not only this, these are some of the situations that we are going to find out the answers for. Imagine another situation. The same laptop, when the seller is selling it, he is collecting money and at the same time, he is collecting an old phone. There is an exchange offer which is going on. There is a exchange offer which is going on. The buyer is allowed to give his old phone, along with that some money to buy a new laptop. When the invoice is issued in this situation, the invoice will only contain the amount which has to be paid in money. The invoice will contain only the amount which has to be paid in money. Should we multiply 18% GST only on the money portion and totally ignore the value of the phone? Let's say the laptop was for 60,000. Because the buyer is giving his old phone, only 50,000 rupees is being collected from the buyer. On the invoice also only 50,000 rupees is mentioned. Now this 18% GST which has to be charged, will it be charged only on the 50,000? So these are some of the situations, some of the complications which may arise, and the topic value of supply gives us the clarity of how much should be the taxable value, in these different situations. This taxable value is referred to as value of supply. So whenever we are saying what is the value of supply, we are indirectly asking what is the taxable value. Once we know the taxable value, we will simply apply the rate of GST to this value and find out the GST that has to be paid by the seller. All right, starting with the topic. Generally, what is the value of supply? It is the transaction value. That means our first example, simple example of 60,000 rupees being charged from the buyer. No complications. There is no delivery charges, there is no discount, there is no municipal taxes. 60,000 rupees being charged from the customer. In that case, we all know 60,000 is the amount on which we are going to charge GST. That simple value is referred to as transaction value under GST. What is transaction value? Transaction value is defined. Transaction value is defined to mean the price actually paid or payable. The price actually paid or payable when the supplier and buyer, they are not related. When the buyer and the supplier, they are not related, and the price meaning what? The amount mentioned on the invoice. The amount mentioned on the invoice is referred to as price. Amount on invoice is referred to as price. This price or amount mentioned on the invoice, that should be the sole consideration. What is the meaning of sole consideration? It should have been the only consideration. Meaning, our second example, where instead of a laptop, when selling a laptop, the buyer gave money and an old phone, that is not covered here. Why? Because the money that the buyer paid, that was not the only consideration. There was also phone being received from the buyer. That means in our second example, we cannot go for the price when computing GST. What is the price? Price is amount mentioned on the invoice. We can't go for that. We have to include the value of the phone also. Correct? We have to include the value of the phone also before charging GST. So price, the amount mentioned on the invoice, is not the correct value. It is not the correct taxable value because one of the conditions mentioned here is not fulfilled. What about the first one? When the supplier and the recipient are not related, only then we can follow the price. What happens is, in between related persons, the value can be affected because of the relationship. Let's say there is a father. He is in the business of manufacturing Coca-Cola bottles. Okay. his daughter, she is in the business of, let's say, printing labels or stickers. Father gives the contract for applying these labels or stickers on his bottles to his daughter. For this, the daughter will obviously charge. But because there is a relationship of father and daughter, do you think that we can rely on the amount mentioned on the invoice issued by the daughter? Don't you think this relationship will affect the price that the daughter is charging her father? Yeah. There is a good probability that this price is affected by the relationship. Generally, it will be lower. Because of the relationship, it will be lower. So the government is saying that I don't care that you charge low from your father because of your relationship, but my taxes you have to pay on the normal price, which you would have charged if you would have sold this to an unrelated person. So the price which is mentioned on your invoice, I will disregard that price. I will disregard that price. I will not let you compute 18% GST on the price which you have mentioned on the invoice. I will give you a different value. That value will be treated as value of supply or the taxable value, and I want GST on that particular amount and not the price mentioned on your invoice. So let's recap. Under GST, the amount of GST is determined based on transaction value. What is the transaction value? It is the price actually paid or payable when these two conditions are met. Supplier and recipient should not be related, and the price should have been the sole consideration. Apart from this, the government says there are some compulsory inclusions. There are some amounts which are supposed to be compulsorily included in this transaction value. And there are conditions which the government has given, which if satisfied, only then you will be allowed to minus the discount before charging GST. If you satisfy these conditions, you will be allowed to subtract discount before charging GST. If you don't satisfy these conditions, then you cannot subtract the discount amount. You have to first charge GST and then give the discount. Okay. Now this was what is the situation generally. What about those situations where these conditions are there? Let's say supplier and buyer are related. Let's say price is not the sole consideration. Then what to do? Then we can't go for the transaction value. That is clear. We cannot go for the price mentioned on the invoice. That is transaction value. We cannot go for that. Then what value should we go for? That value is given in the valuation rules. That value is given in the valuation rules. What will be the value on which you will pay tax when these conditions are not there? That is given in the valuation rules. We will see the valuation rules also if time permits. Otherwise, we'll complete the compulsory inclusions and what are the conditions for you to be able to subtract discount from the invoice before charging GST. Right? Okay. Let's see what are the compulsory inclusions in the transaction value. First one, any taxes, duties, cess, fee, charges under any law other than GST has to be compulsory included in the value of supply. Meaning, our first example where 60,000 rupees was the price for laptop. On that, there was municipal taxes. I don't remember the amount. Let's say 500 rupees was for municipal taxes. Here they are saying the taxes under any law other than GST, it is the compulsory inclusion. That means you have to include 500 rupees before multiplying with 18%. Your GST will be calculated on 60,500 rupees after including the municipal taxes. Why it is included? Because it is the tax other than GST. If there is any tax other than GST, that has to be compulsorily included. That tax can be a duty also, say customs duty. You have purchased something, you paid customs duty, now you are selling it, include that customs duty. Cesses, fees, charges, anything, excise duty, any kind of duty or tax which you are charging from your buyer, you have to ensure you are charging GST also on that tax. Will there be double taxation? Yes, there will be double taxation to this extent. There will be tax on tax, but the first tax will obviously not be GST. It will be some other tax. You will collect GST on that tax. Okay, that was the first inclusion. Second, any amount that the supplier is supposed to pay, but which is paid by the recipient and hence not included in the price. This also has to be included. First of all, what are they trying to say? Let's say this is the supplier. He is the supplier. Okay. Supplier, I'm calling him seller. This is the buyer. And there is a third person or some other person, entity, something. A, B, and C. B is the buyer. He is supposed to pay the seller because he's buying something, right? Imagine a situation where the seller is in turn supposed to pay something to C. 60,000 rupees, let's put figures here. 60,000 rupees the buyer is supposed to pay to the seller. The seller is supposed to pay 10,000 rupees to C because of some transaction between A and C. We are not bothered about why A has to pay to C. Maybe A purchased something. Maybe A took a loan from C. Maybe C is a relative and A wants to give something to C. Does not matter why A has to give money to C, but A has to give 10,000 rupees to C. So what is the seller saying? Seller is telling to the buyer that, listen, I'm supposed to pay 10,000 to C. I am ready to make the price 50,000 for you if you pay this 10,000 to C. So in the invoice which the seller will issue, he will reduce the value from 60 to 50 if B is paying this 10,000 to C. Okay. Now, will the GST government, will our government sit quiet because of this? Whatever is the value on the invoice, on that the government will get GST, right? They have reduced the value, but in effect, the transaction is still happening for 60,000 rupees. From the buyer's point of view, still 60,000 rupees is going. Meaning, the actual value of what the seller is selling was not 50, it was 60. Government is saying, if such a situation has taken place, then please pay me my taxes on 60 only. Does not matter that on your invoice you will put 50,000. Does not matter that on the invoice you are printing 50,000 rupees. But I want my taxes on total 60. That is the effect of point number B. Let's read that point again. Any amount that the supplier is supposed to pay, this amount supplier is supposed to pay, but which is paid by the recipient, the buyer paid it, and hence not included in the price. That's why you reduced your price from 50 to from 60 to 50. Government is saying, please pay my taxes on the same 60,000 rupees. This is a compulsory inclusion. That means we will start with 50,000 rupees, the price mentioned on the invoice, and we will add back 10,000 rupees. And on this total, we will charge GST. All right, let's go to the next one. Incidental expenses, including commission and packaging, and any amount charged for anything done by the supplier at the time of or before the delivery of goods or services. Meaning, if the supplier has charged for anything like transportation, packaging, handling charges, or anything else, it can be any other name also. If the supplier charges the buyer for all of such incidental expenses, including commission and packaging, these are just examples, any of these incidental expenses, then we are supposed to compulsorily include them in our transaction value. That means GST has to be applied on these amounts also. GST has to be applied on these amounts also. So going back to our first example, where 60,000 was there and then delivery charges were there, delivery charges also has to be included before we multiply 18% and find out the amount of GST. Okay, all right. Next one. Interest, late fee or penalty for delayed payment of consideration. If the seller is charging interest, late fee or penalty because the customer delayed in paying the money, on such interest, late fee and penalty also GST has to be charged. Now imagine a situation if this was not the case. Imagine a situation if this was not the case. Then what would people do? If we say that no need to pay GST on the interest or late fee or penalty for delayed charges, then what would people do? If somebody has to sell something for 60,000 rupees, they would say that you please pay 40,000 on time. Sorry, we will reduce this value to 40,000. We will reduce the value to 40,000 rupees. And 20,000 rupees I will charge as penalty because you will not pay on time. What will be the effect of this? GST will be there only on 40,000 and the government will lose GST on 20,000 rupees. Everybody will start doing delay payments, or everybody will do some other default because of which there would be extra payable to the seller. And on this extra, there would never be GST. The government is not going to sit quiet and let people do all of this. Government has learned from its experiences under the previous laws. So the government has clearly brought this into the law. The legislature has clearly brought this into the law, saying if there is any charge for interest, late fee or penalty, that also has to be included in the transaction value. Don't think that just because you are collecting all of these extra from the buyer, we would let it go and not charge GST on that. Okay, so include these also in your value of supply and then calculate the GST. The last one, subsidies directly linked to price, excluding subsidies by government. This also has to be included. Okay, this is a little confusing. Listen to this carefully. Subsidies directly included or directly linked to the price, excluding subsidies by government. Okay, let's first take an example of this. What is an example for this? Imagine in Karnataka, the government has come out. I shouldn't say government. There is a scheme. Okay, we'll see who has come out with this scheme. There is a scheme saying that if you set up a factory, in rural areas, then whatever is your selling price, we want that price to be reduced, and whatever reduction you are doing, we are going to pay that much money to you. Imagine, okay, let's take the name of a government. Karnataka government has come out with this scheme. Okay, they are saying you set up a factory in the rural area. There is a person, he came, he set up the factory in the rural area. Let's say the factory is for, what should we take? Let's say the factory is for computers only. Okay. The factory is for computers. The selling price for one computer, let's say it is 60,000 rupees. Government is saying, for the development of the rural area, don't sell this for 60,000 rupees, sell it only for 40,000 rupees. Sell it only for 40,000 rupees. We want computers to be used by the poor people also. It should be affordable for them. So instead of charging 60, you charge them 40 only. This the government is telling to the seller. Seller will say, okay, but what about my 20,000 rupees? Government is saying, don't worry, that 20,000 rupees we will give to you as subsidy. On every sale that you do at 40,000 rupees, we will give you 20,000 rupees to take care of this loss of 20,000 rupees. So this subsidy is directly affecting the price. From 60, the price is falling to 40. From 60,000 rupees, the price is falling to 40,000 rupees. So this is a subsidy directly linked to the price. My selling price has been reduced because I got this subsidy from the government. Okay. What are we saying here? What has to be compulsorily included in the price? Now the law is saying this 20,000 rupees you include before calculating GST. That means we want GST on 60,000 rupees only. Include this 20,000 rupees subsidy by which you have reduced your selling price and then pay GST on 60,000. But when this inclusion has to be done, not when the subsidy is given by government, be it central government or state government. It should not be by government. If the subsidy is given by government, you are allowed to charge GST on 40,000. You are allowed to charge GST on 40,000. But instead of government, if it is a private body, it can be a NGO, it can be a trust, or it can be anybody else. Instead of government, if this 20,000 rupees is being paid by somebody else, then the GST has to be charged on the total value, that is 60. After adding back this 20,000 rupees of subsidy. We have to add back the 20,000 rupees subsidy and then calculate GST on the total. Let's look at that point again. Subsidies directly linked to the price, excluding subsidies by government. If the subsidy is given by government, don't include it. If the subsidy is given by somebody else, you have to include it in the value of supply. These were the compulsory inclusions. So going back to our previous slide, here we saw that generally, what is the value on which we are supposed to pay GST? It is the price mentioned on the invoice, which is the transaction value, TV. Transaction value, which is the price on which we are supposed to, or which the buyer is supposed to pay. On this transaction value, there are some compulsory inclusions. Those compulsory inclusions we have seen. Now, next we are going to see is, when are we allowed to subtract discount before calculating GST? When are we allowed to subtract the discount? What are the conditions which have to be met, which will allow us to minus discount and then charge GST? Okay. Discount. Now there are two possibilities for discount. First possibility is discount is being given at the time of sale itself. When the sale is happening, the seller is saying, you have done shopping for a lot of value. You have picked up 10 things. So I'm giving you 20% discount. Or the shopkeeper is saying, this is festival season. or end of season sale, end of season sale. So we are giving you 10% discount. Whatever may be the reason. The discount amount is known at the time of sale itself. Then the condition for minusing discount and then applying GST is the discount should be mentioned on the invoice. That's it. Only one condition. On your bill, oops, what kind of bill is that? On your invoice, all you have to do is, after mentioning all the amounts and you have total, just mention discount here. And if you mention the discount here, government is saying, I will allow you to minus this, and after minusing this, whatever is the reduced price on this, you are allowed to charge GST. Only one simple condition. Just put the discount on your bill, on your invoice. That's it. Then you are allowed to minus it. Now the second possibility. Discount is given after the sale or after the supply. Now here there is a problem. What is the problem? There is a chance for the government to lose money because of government allowing you to minus discount after sale. How is that? Let's look at a situation. Imagine A sold something to B. Okay. A sold computer to B. A sold computer to B. 60,000 rupees B is supposed to pay. Sale has happened. Sale has already happened. After 1 month, this was a credit sale, okay? After 1 month, B is paying only 50,000 rupees. B is paying only 50,000 rupees. A is saying, please pay the complete 60. B is saying, that's all the money I have. Please treat 10,000 rupees as bad debt. A is saying, no, I can't do that. Please pay. I will give you more time. B says, okay, we'll see. 2 months are over. 3 months are over. 1 year is over. But B has not paid this 10,000 rupees till now. Now look from A's point of view. A has already paid GST on 60,000 rupees at the time of sale itself. At the time of sale, A charged GST on 60,000 rupees and paid it to the government. Now B is paying only 50,000 rupees. What is A thinking? A is thinking, if my sale would have been for 50, at least the GST on the 10,000 rupees I would have saved, that has gone from my pocket. A is thinking, presently GST has gone from my pocket on the entire 60,000 rupees, whereas I have received only 50,000. Why don't I reduce my original selling price? Why don't I reduce my original selling price so that the GST that I have paid, at least that comes back to me? So what would A want to say? A would want to say, I have given a discount of 10,000 rupees to B. A would want to say that he has given discount of 10,000 rupees to B. And then A would say, I have paid excess GST at the time of sale. So that excess GST now I want to set off with my other sales, my other payables, other liabilities. Whereas the government's law, the government's objective is very clear. Government does not want to suffer any loss of GST because of bad debt. Loss of GST because of bad debt, the government is not ready to suffer. Bad debt is bad debt, that is your problem. I still want my GST on the sale value. You are supposed to pay as a seller I don't care you have not received it from the buyer, because under GST, it is the liability of the seller to pay GST. Nowhere in the GST law it's mentioned that the seller is allowed to collect that from the buyer. That is a contract between the buyer and the seller. In the GST law, you would always see that the law says seller is supposed to pay GST. Whether or not it is collected from the buyer, government is not bothered. So the seller will say, it's a bad debt, I did not collect it from the buyer, how can I pay GST from my pocket? It is indirect tax and all that. Government will say, nothing doing, please pay me my GST on the value of sale. So now the question comes, how does the government bifurcate original after sale discount, true after sale discount, true after sale discount from a situation of bad debt? Government does not want to suffer loss because of bad debt, but the government is okay to allow you to minus discount if it is actually a business commercial transaction. It is actually after sale discount, then the government is okay to allow you to minus it. But if it is bad debt, government is not okay to allow you to minus it. Now the question comes, how to frame the law in such a way that these two situations can be differentiated from each other. So keeping this objective in mind, what the government has done is, government is saying, if you want to minus discount, which has been given after the sale, then these are the conditions you have to fulfill. First condition is, the terms of the discount should have been agreed before the sale took place. The terms of the discount should have been agreed before the sale took place. Let's say your offer is that if you pay within 1 month, the seller is saying, I will give you 5% discount. Okay, no problem. But make sure that these conditions, they were recorded in writing at the time of sale itself, before the sale. There should have been agreement before the sale. Maybe on the invoice you have mentioned it somewhere. Maybe there was a separate work order, or maybe there was a PO. Whatever may be the form of recording, or even email, whatever may be the form of recording, make sure your intention of giving discount in the future is recorded before the sale itself. If that is the case, then there is no question of this being bad debt. Then the government is sure that yes, there was an agreement before the sale itself that if so much is done, if these conditions are fulfilled by the buyer, the seller is ready to give you a discount. Okay, no chance of bad debt. Next, having this agreement is not enough. You have to show, as per this agreement, which invoice is eligible for the discount. You are supposed to link it to the relevant invoices as per the agreement. In our example, let's say the buyer has made the payment within 1 month. The buyer has made the payment within 1 month. Now you are supposed to show what was the original invoice towards which this payment is being done, and how, as per the terms of the agreement, 5% discount is being offered. This entire agreement invoice payment linkage has to be done. Meaning we have to prove it, that this was the agreement, this is the invoice mentioned in the agreement, these are the conditions as per the agreement, all of them have been fulfilled, and that is how discount is being offered. And it is not a case of bad debt. Now, the last condition which is there to be fulfilled in this situation is, since this is a after sale discount, meaning my original invoice, it contained a higher price. Now I am reducing that price because I am giving after sale discount. Sale has already happened. On that invoice, I have already collected GST from my buyer, correct? After the sale, I am reducing the price. I am giving discount, meaning after the sale, I am reducing the price. Now the question is, there is another loss possibility from government's point of view. When the original invoice was issued at a higher value, it means that my buyer has already claimed input tax of this higher GST. My buyer has already claimed input tax on this higher GST. After 1 month or 2 months, whenever it may be, now we are giving discount. What is the effect of giving discount? My original GST value, which I have paid, it is coming down. My liability to pay GST is coming down. At the same time, my buyer's input tax credit is also coming down. Correct? My original tax payable is coming down as a seller. It also means the original input tax credit of the buyer is also coming down. So the last condition is that the seller has to ensure that the buyer or the recipient, he reduces or reverses his input tax credit to the extent of my value reduction. I am reducing the value, I am reducing taxes after the sale. My buyer also has to reduce the input tax credit after the sale. These are the 3 conditions which have to be fulfilled for after sale discount. Whereas if this discount is being given at the time of sale, just put it on the invoice, your job is done. Simple. But if it is after sale, 3 conditions. The first one is put it in writing before the sale takes place. Later link what was in writing with your invoice. Third one, ensure the buyer has also reduced his input tax credit. If these 3 conditions are met, you are allowed to pay lower GST. Okay. Having done that, now we have covered the first portion. We have covered the first portion of the topic of value of supply. What happens generally? How, in which situation we are allowed to go for the price mentioned on the invoice? What are the compulsory inclusions? And when we are allowed to minus discount from the invoice? These 3 topics are done. Now let us do 2 past examination questions relating to these 3 topics. Okay. Okay. The first past examination question is this. I would want you all to solve. I'll wait for 2 minutes and then we will see what is the correct answer and how did we arrive at the correct answer. Please try to solve this. All right. So this is a pretty straightforward question. YP Private Limited sold goods to PR and Co. Okay. The list price was 1,40,000. 1,40,000 for the goods. Besides, that means in addition to what is there in the list price, packing charges of 6,000 have been charged. To be included or not to be included? Packing charges. To be included. Why? Because in the list of compulsory inclusions, incidental expenses was mentioned. Incidental, what is the spelling? Incidental L. Okay. Incidental expenses was mentioned where we were supposed to add incidental expense. Packing charges is an incidental expense. We are supposed to add it. Interest for delayed payment, 8,000. To be included or not? Yes, it has to be included. Interest, late fee, penalty. That is also mentioned. Correct. Transportation charges, 12,000. Through own vehicle, be it through own vehicle, hired vehicle, whatever it may be, that is there only to confuse you. Okay, through own vehicle, it is given only to confuse you. Transportation charges is also incidental expense, or you may say it is something done by the seller before the supply or at the time of supply. So this also has to be added. All of the amounts mentioned here, they all had to be added. Now let's see what is the total for this. 1,40,000 plus 6,000 plus 8,000 plus 12,000. 1,66,000. So that is the answer. The total of this is 1,66,000, and that is our answer matching. All right. Now let's solve another question which has been asked in previous exams related to what we have studied till now. Please try to solve this one. This is not so easy, but a typical question which gets asked multiple times in the exam, because this is not so easy. All right. Let's try to solve this one. Mishra Enterprises of Ahmedabad had made supplies of 3,50,000. So let's put down 3,50,000. This is the original sale value. Sale value. Okay. Where is it? Yeah. Municipal authorities of Ahmedabad on such supplies levied the tax at 10% of 35,000. So municipal taxes, does it have to be included? Yes, it has to be included. This was the first item mentioned in our compulsory inclusion list. All right. So they have levied the tax at 10% of rupees 35. 10% of rupees 35 does not mean 10% of this. They are saying they have levied the tax at 10%. How much they have levied? Of 35,000, meaning 35,000 is the 10% of this. So 35,000. This is municipal taxes to be added. Yes. CGST and SGST charged on the supply was 42. How did the seller arrive at the value of supply? We don't know. So how much ever CGST and SGST that he has computed, we are totally going to ignore that. Because without finding value of supply, how can we get GST? We will multiply the rate of GST, usually 18%, to the value of supply. And then we will get the amount of GST, right? Now we are first finding out value of supply. After we get value of supply, only we will get what is the value, what is the total GST, right? So we'll totally ignore CGST and SGST charged on the supply of 42,000. This will totally ignore. Okay. Packaging charges or packing charges not included in the price of 3,50,000 is 5,000 rupees. Packaging charges also has to be added. Packaging charges has to be added because it is a incidental expense. So we'll add 5,000 also. Subsidy of 20,000 was received from an NGO. Okay, subsidy has been received from what? NGO. That means we have to add it back. On the sale of such goods, and the price charged of 3,50,000 is after taking into account the amount of subsidy so received. That means they have already reduced their selling price and they have already minus the amount of subsidy. Correct? Because what is the logic of subsidy? Our original selling price is there. In our example, original selling price was 60,000. There is a NGO or government which comes and says 20,000 they will pay. We reduce our selling price by that and we have a new selling price. New selling price. And this was our original selling price. Because of the subsidy, we reduce our original selling price and we get a new selling price. The law says if this subsidy is from government, then on new selling price, we can charge GST, nothing has to be done. But if it is from non-government entity, then we are supposed to add back this 20,000 rupees. Here in our question, they have given it is from an NGO and they have already reduced it. How do we know that? Because they have mentioned after taking into account the amount of subsidy. That means they have already reduced 20,000 rupees. So this 20,000 rupees, we will have to add back. So 20,000 rupees subsidy from NGO. We will add back. Okay. Next. Discount offered is 2%, which was mentioned on the invoice. Now this particular sentence, it is not very clear how the discount, on what amount the discount has to be given. Okay. But the assumption which is done always is that this 2% is of the original selling price 3,50,000. This 2% discount is of the original selling price, which is 3,50,000. That is always the assumption because the seller, before they came to you and me as tax consultants, he had already raised the invoice for 3,50,000. And he had already calculated how much discount he wants to give to his buyer. So he would have thought of something and then put 2% because he is ready to let go only of so much money. So keeping that in mind, we will also calculate discount on 3,50,000 rupees. Okay. So 3,50,000 rupees into 2% is how much? 7,000 rupees. 7,000 rupees is the discount. How did we calculate this? We did 3,50,000 into 2%. That's how we got 7,000 rupees. This is in negative because it is mentioned on the invoice. We are allowed to minus it. Now let's see what is the total of all of this. Let me pull up my calculator. 3,50,000 plus 35,000 plus 5,000 plus 20,000 minus 7,000. The total is 4,03,000 rupees. Let's see what is the answer. The answer is also 4,03,000 rupees. Same, right? All right. So this was the toughest question which can come from this topic. This question is not only mentioned in your textbook with different figures. This question has been asked multiple number of times in the exam also. All they do is change the figures. So this is one of the questions we have to know before sitting for the exam. Two important things to be kept in mind when doing this question. How is this discount calculated first? And this subsidy, the treatment of this subsidy given here. Subsidy is already taken into account, means it has already been minus. After taking into account means it has already been minus, not added. So we are supposed to add back, and discount offered is at 2%, and this 2% is calculated on the original selling price. These are the two important things we should remember when solving this question. All right. So with this, we will end today's chapter, today's demo session. After this, we cover the valuation rules, rule 27, 28, 29, 30, 31. And then we see the past examination questions from those. And that's when we end the chapter. All right. Hope you all enjoyed today's session. Let me stop the sharing. Hope you all enjoyed today's session. And if you would like, you can check our normal full-time courses and become part of the Ekcel Academy family. Looking forward to seeing you all. All the best for your exams. Take care. Bye-bye.